Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about the relationship between the US dollar and oil and what I'm expecting to happen in the near future, or at least through the end of this year. As you can see, I've got the dollar index up. This is the DXY, and what we're looking at here is you can see that the dollar has slowly climbed into the latter half of the year, and we've actually had a little bit of a run going into the month of October. Some of that is slowing down here as we look at the 5-day chart. What we're experiencing at this point in time is the buildup and accompanying announcement that we saw associated with the FOMC statement today, where they highlighted that they are going to continue purchasing additional treasury-backed securities and basically continuing to print money going into the end of this year. We saw a rally associated with that, despite the fact that they said that they were going to begin tapering, which is slowing down the purchasing associated with that. What that looks like is that means that we are going to add close to another $500 billion in total assets to the Fed balance sheet by June of next year. So the expectation is we could continue to see the dollar actually fall, at which point the play or the rotation I would expect to see is oil to go higher. Right now we've seen a heavy sell-off into today, and a lot of that is to be expected. Pretty much every time we have an FOMC meeting, we see oil sell off, and normally the dollar stays at about the same range. But one of the things that led into this is we had an OPEC meeting yesterday where essentially they highlighted that overall production is going to stay normalized. They're not going to produce more. And here in the United States, we actually had a much larger reserve of crude oil than was originally expected. However, we're seeing 80-20 right now about oil futures, which is a decent ways off the highs that we saw earlier last week. And what I'm expecting here is due to the fact that oil is priced, generally speaking, in US dollars. That means that the stronger the dollar, the lower the price of oil, because we're comparing this to other currencies, and the weaker the dollar, the higher the price of oil. So what we're going to be expecting going forward is to see another, or at least my expectation is that I think as the dollar becomes weaker, as we continue to see increased demand as well as the limited supply in place, that I'm expecting to see $90 oil by the end of this year. What I'm going to be looking to do is to not necessarily play just oil, but probably dive back into one of my all-time favorites with Gush, G-U-S-H, and we'll start leveraging that going forward. But you can see the downtrend here. What I'm going to be looking for is to probably enter back into Gush later this week and then look to ride that up as the dollar goes down. However, this is purely speculation and I'm just some guy on YouTube, but we've continued to see a very strong relationship between oil, DXY, and the overall trend of oil going higher this year based on the fact that we have limited supply and increased demand and a weaker, or the expectation or the possibility of a weaker US dollar. So I'm going to be looking to enter Gush and look to see oil get back above $85 a barrel, and I expect that to happen by the end of this year. If you have any questions, feel free to ask them in the Discord, which is free to join and in the description down below. And if you find this content helpful, please leave a like and subscribe. Thanks. Talk to you later.